Hello, everyone, and I'm really glad to be here today with you. We reached the finals of our spring season, and I'm really glad to see every one of you. And we are starting our first pitch session for the whole world. So good morning, Europe and Africa. Good day, Asia, and good evening and good night, actually, America. And we are here today for our Unicorn Events finals, the world finals of the world largest startup pitch contest. We are broadcasting to the whole world. My name is Anna Fedorova, and I'm CEO of Unicorn Events and Chief Partnership Officer of Startup.Network, who is the organizer of this wonderful world contest. Finally, we have gathered together after going over a huge number of the startup applications from all 5 continents. And today you see the best ones pitch live. And our event is happening thanks to our sponsors, platinum sponsor, Silicon Valley Syndicate Club, golden sponsor, Network VC California Seed Fund, and silver sponsor, VC House. Please meet our contestants from all over the world. The winners of our preliminary unicorn battles that we held over the spring season. Unicorn Events is an open competition where successful startups pitch live to private investors and venture funds. We started our events back in 2009 and have done more than 250 of them over all countries of the world. We are doing a really good job helping startups to fundraise, meet directly investors, and look how wonderful our winners are doing. More than 180 startups had found their investors with us, and it's more than 75% of our participants. All of them got funded. So be sure to join us. And if in any case you miss any of our events or any startup pitch, you can see them all at our YouTube channel. Subscribe to be sure to see everything that is happening in VC and startup world. We have amazing interviews there, insights, and lots of wonderful stuff. So put your likes and be sure to subscribe. And in little bit more than a month, we are starting a new season, and we hope it will bring us many great discoveries. Be sure to stay with us. And that was all from my side, not all, sorry. Also, I'm welcoming new partners to our partners network. Starting this season, we are doing unicorn pitches all over the world, where local partners do business with us by doing our events for local startups and inviting local and international investors. So if you would like to explore this partnership opportunity, please be sure to contact me or our great event managers. And right now, we are all ready for the finals. I see everybody is online. Marina, glad to see you. Please meet Marina. She'll be our host for today. And she will do... Absolutely, yes. Tell us what you will have for us, and the floor is yours.
Thank you very much, Anna, for a great introduction, as always. Laconic, short, and precise. So I'm very happy to see you all today, and very happy that we're having the highlights of our season. We have the Unicorn Cup today. So the best of the best gathered together. We have the best startups who won the previous preliminary battles, and they will be contesting today. So as always, I would like to say many thanks to our great partners who are supporting us all the time. Guys, you are amazing. Let's keep on, and please find out more about our partners on the website. And as always, I'm very much excited to introduce our jury expert board. And these are amazing experts from all over the world, mostly from venture funds, and they will be evaluating our startups today. And as always, I would like to start our jury introduction part, where juries can introduce themselves in just 1 minute to tell shortly about their fund, about their investment strategy, and anything they just would like to share with us today. Traditionally, I would like to start with Alexander Soroka, the founder of Startup.Network and Unicorn.Events. Hi, Alexander. How are you today?
Hello, Marina. Hello, Marina. I'm glad to be here today on this spring final, and I really believe that if you seed something in spring, it must grow. You know, so this is the best season of the whole world, the whole year. I mean, so our funds usually invest up to 500K. We invest on late seed round A stage, and we are geographically and industry agnostic. Thank you.
Thank you, Alexander. Who would like to jump in next?
Maybe I want to be next.
Hi.
Good morning or hello, everybody. Good to be back on this panel. Very happy. I'm Paul from Danube Angels in Vienna. We are equity platform, financing network, and angel network, and we are looking to companies Central Europe. Ticket size is 50 to 500,000. We are looking for companies with at least some marginal traction, some paying guests, as we call them in Austria. And I'm looking very much forward. Good luck to all the companies and good to be here. Thank you.
Thank you very much, Paul. And you also have seeds on the background, which should grow by autumn, right? You have this.
Yes, that's right.
So do you think the same as Alexander?
Yeah, so with Alexander, I think he's always at the jury. So for all the judges who are new, maybe our messages are interesting. All the others have heard it before.
Exactly. Who would like to jump in? I see.
I'll go next.
Hi.
Hi, good day, everybody. I'm William Du from Engineers. We are based in Kuala Lumpur. We have a new ESG fund that invests in agriculture and energy-related business here in Southeast Asia. And we also invest in EdTech and FinTech, right? So I look forward to hear the pictures from the contestant. Thank you.
Thank you very much, William.
Okay, maybe I will go next then.
Great.
Hi. So hello, everybody. Thank you for having us again. My name is Dennis Kerpenstein. I'm Managing Director at Faraday Venture Partners. We're a Spain-based venture capital fund and private investors network with offices also in Germany and in Benelux. We are a sector agnostic investor, and we usually invest between 300 to 500,000 into European early stage startups, which already have a little bit of traction. So I'm very happy to be here and very excited to see the teams.
Thank you very much, Dennis. I see everybody's investing with a little bit of traction here, right? So I see Peter from Singapore is also here. Peter, are you with us?
Yeah, double tasking. It's actually a national holiday here. So you guys let me work on the holiday.
Same here, Peter.
Good timing. Yeah. Anyway, hello everyone. Glad to be here. Looking forward to your pitches. I'm Peter Honika. I'm a venture partner at SIA Ventures out of Singapore. We do have a presence in Silicon Valley, Luxembourg, Israel, Hong Kong, and Singapore. We are focusing on a deep tech, med tech, any stage up to Series B. Size of a check depends on on a company and the status and the technology. And again, looking forward to your pitches. Thank you.
Thank you very much, Peter. And I see Tanya, who also spends our holiday with us today. Right?
Hi, everybody. Yeah, it's good to be here. Excited. Exciting day. It was fun to judge the previous round. So today's a big day. Wishing all the contestants a lot of luck and success. My name's Tanya. I'm calling you in from Berlin. I've been a VC for about 25 years across various different funds. I'm currently in the process of raising one. focus is deep tech, mobility, SaaS, well, smart city stuff. Basically, sweet spot between 500,000 and 2 million rounds, and excited to be here.
Thank you very much, Tanya. Anybody else would like to jump in? I see. Okay.
Hey, so Seamus Crawford here from VU Venture Partners. Good to see everyone here today. So we're a multi-stage investment fund, primarily focusing on seed through Series B on our initial check, investing between 100K to $1 million, averaging out around $400,000, and reserve up to $10 million follow-on for each company. We have offices in San Francisco, New York. I'm actually based in Hong Kong as part of our Asia team. We're sector agnostic, so we focus on 5 core verticals, which covers a lot. So consumer, enterprise, fintech, frontier, which is advanced AI, robotics. We even have some space investments in our portfolio, and also healthcare as well.
Wow, sounds great.
Good to meet everyone. Looking forward to hearing the each startup story here.
Thanks for joining us today, and let's see our startups in a bit. And in the meantime, let's see somebody else wants to present.
Hello world, can you see me? Can you hear me?
Hi, Nicolas.
Nicholas Hulk here. I'm founder and CEO of TradeWorks.VC, based in Singapore. We invest in digital trade enablers, which means logistics technology sort of crossing over into e-commerce. Ticket sizes up to 2 million, seed to Series A, global focus. Great to be here. Good luck to everyone.
Thank you, Nicholas.
Yeah, I could maybe continue.
Sure.
Hi, Andreas here from the Venture Partners. I'm now 12 years in venture capital. I'm taking care of our German speaking and some international business. We are a Paris-based VC with about 850 million under management, usually invest into Series A between 1 to 4 million. And at the moment, I'm focusing a lot on fintech and retail tech, but we're more a B2B software kind of investor. Yeah, looking forward to choose the best startups today.
Yeah, geographical agnostic, right?
Yes.
Yeah, thanks, Andreas. I see our Slava from Network Investments is also here. Slava, could you review?
Sure, I always glad to talk a bit. Yeah, I also agree with all that. It's great to have this cup. We'll see all the best from all other cups that we had before. And shortly about myself, yeah, I'm Slava Bedlis. I'm managing partner of Network Investments, which is a part of Startup.Network ecosystem. And we're actually helping investment professionals and investment companies, investment banks to better, I would say, monetize their network, their access to capital through enlarging their deal flows with global startups all over the world and helping exchange them. So if you might be interested, I really would be glad to make partnership with you. Thanks.
Thank you very much, Slava. Okay, I see that we actually can proceed to our pitching session. And yeah, and if somebody jumps in the meantime, we can also have the short presentation during the pitching in between. So I'm excited to introduce our great startups today. I remind you that they were the winners of the preliminaries, like all of them were the winners of some continental battles. So we have startups from all over the world right now. And I would like to remind the juries how to vote if there are some new juries at the moment. So just each of you got the voting link on mail just one day before the event. So you click the link and you scroll down, you see the landing page, you scroll down and you see all the startups in the order of pitching. So, and there is the mark to evaluate from 1 up till 5. 5 is the highest investment potential. So we are evaluating particularly investment potential. And just in case, all our guests can also come to our landing page and vote and choose the startup they like the most and put the likes to startups they like the most. So, and I would like to remind you that we are a public event, and by the regulations of the US, we are not allowed to mention any specific fundraising sum of money during the competition, but startups can mention that they are raising and what stage they're raising, so this is fine. I would like to start at the moment our pitching session, and we start today from a very nice startup from Latvia, and it's called SIA Aerones. So it's a mechanical engineering, production, electronics, power engineering, and robotics. And they're making the maintenance of wind turbines safer and efficient. And we have today
Dainis.
Hi. Yeah, because last time it was your colleague and I confused the name, so yeah. I wanted to be sure.
I was not able to be in two places simultaneously, so but now I'm here.
Yeah, nice to see you, Denis. And you are again the first. You were the first at the Eastern European battle, and now you're again the first. So this is interesting. Let's start.
Okay. Hi guys, my name is Dainis Krūze. I'm co-founder of company Aerones. We are building robots for wind turbine blade maintenance. We are YC company. We have more than 5 million euros in European grants to cover the R&D. And in June, we are launching our Series A round, investment round. So the wind industry is growing rapidly by adding more and more turbines each year. The turbines are also becoming bigger. Every 10% in the length of the blade gives them 20% in efficiency. So the bigger the turbines, the more efficient they are. But the bigger the turbines, the bigger the problems on the blades. Wind industry is sometimes losing even up to 20% of its potential because of the icing, debris on the blade, problems caused by the lightning damages, and leading edge erosion and cracks in the blades. Wind industry blade maintenance is $7 billion market, and it's growing. Right now, all of the maintenance is done by people hanging in ropes or in the baskets, which is purely manual job, which is slow, which is not efficient, and it can be done only in particular weather conditions. So it costs a lot of money to our customers. It's not safe. So what we do, we put 4 winches on the ground and robotic arm platform in the middle. So the first winch is pulling the robot up and down. Rest of the 3 winches are adjusting where the robot is in horizontal space. It's kind of a 3D printer in the sky. So we can access any point on the blade in a very fast and efficient way. So in the middle, in just a few minutes, we can change from one arm to another. We can perform lightning protection system tests. We can perform visual inspections, different kind of non-destructive tests like ultrasound or active thermal tests. We can do more. We can do different kind of repair tasks, cleaning, sanding, grinding, painting, filler applications, and etc. So there are different kind of arms which are doing different kind of tasks. Same technician is doing the job remotely in safe environment, and we enable the technician to do the job 3 to 5 times faster. And there is more. Our robots are suitable to do the job in much higher wind speeds, in much lower or higher weather temperatures. So we enable the technicians to do the job a lot more days in the year. So in our projects, we have 10 times less idle stay days compared to rope technicians. 2020 March was our first, when we launched our services. In 1 year, we have already accomplished more than 40 successful projects with world's largest wind turbine companies, GE, Siemens Gamesa, Enel, Vestas, etc. 2021 is our scaling year. We are adding more robots. We are building more robots to ship all over the world. We've done the projects already in North America, South America, Europe. And now we are scaling. We are getting more customers all over the world. So we're launching our Series A round. And thank you.
Thank you very much, Denis. And any questions, please?
Denis, Can you tell us more about your traction in terms of money, maybe revenue? How does it, is it growing?
Despite COVID and the first year in the market, yes, the first year in 2020, our revenue was a little bit less than $500,000. But in this year, we have already orders for more than 2 million, and we are negotiating for 5 more.
Thank you very much.
Hey, Dennis. I just was keen to understand your revenue model in a little bit more detail and exactly who are your customers, who are you getting these orders from?
Okay, there are like several ways to get the customers. One is the manufacturers of the turbines, so warranty services, warranty inspections, and etc. Another stream is the owners of the turbines and the operators, which are basically the owners of the turbines or operating them. The third one is through the insurance companies, because insurance companies also wants to know if the wind turbines are okay or not, which they're insuring. So basically, those are the ways how we're getting customers right now.
Then I'll go in because Seamus asked a question I wanted to ask. Can you explain your revenue model a little bit more in detail, please?
Service. We are a hardware company. We are a service company with the luxury that we have our own hardware.
Any more questions? We have an update, so the time for questions is extended up to 5 minutes. So please feel.
Maybe just quick. I'm not an expert in this field, but sounds like a no-brainer to use something like that. What is your main challenge in sales, and what do you do with Series A to grow faster?
The biggest challenge is in sales that we need to be local. So basically to communicate with the customers locally. Basically all of our sales up till now have happened remotely. We haven't met any of the customers, only through the Zoom or Teams. So we want to be present. The other challenge is that all of these customers are multi-billion-dollar companies. Like most of the turbines are owned by or manufactured by huge companies, thousands of employees and etc. So the decisions are made not so quickly, but we've managed. We are now already certified service provider for largest wind turbine manufacturers. So we basically can do the job on any kind of turbine, is it under the warranty or not. We've already done the pilot projects for largest wind turbine owners like Enel, EDF, EDP, Deutsche VPD, which is in Germany, and etc. And more than 30 other large companies. Now we are having more than 50 new customers, onboarding 50 new customers which are doing pilot projects. All of the projects are paid. None of the projects are free of charge. And basically, yeah, the scaling is also like the first projects are always happening like they're fairly small, 10, 20, 30,000 euros. And but those are like kind of test projects from the customers. And then we scale to bigger orders. For example, with Enel, last year we did a project for several thousands, and now we are on verge of signing an agreement for millions. For just one service, by the way. Last year we were doing only lightning protection system tests. This year we will do the trials for many customers, paid trials for internal inspections, repairs of the blades, paintings of the blades. So we're adding more services so we can get more money from each turbine in the world.
I'll jump in back into the business model. Your answer was rather short. So are you selling the hardware? Are you leasing the hardware?
No.
What type of services provide?
Every service, basically, we are doing like one lightning protection system test means 500 euros or $500, for example. So we are charging per service. We are taking care of everything, the robots, the technicians, and etc. If we need local technicians in particular countries, we partner up with local rope technician companies or hire local personnel. But we are doing purely service models. So basically, we are not selling the robots, we are not renting them out or whatsoever.
Do you also have alternate solution for the, I mean, obviously your solution is good for the land-based. How about the ones that are anchored in the water? Do you have a solution that would work on that?
Yeah, we won a challenge of the best idea from the GE, which is basically the largest, one of the largest offshore turbine manufacturer in the world. We won the challenge that we pitched our idea how we would like to do the offshore services, and we won the challenge. So one of our partners, which is waiting for our offshore solution, is GE. Also, Vestas, largest offshore turbine owner, Ørsted, are in July, August. We are doing first trials for the offshore maintenance as well.
And your primary market focus is mostly in Europe right now?
COVID, we thought we will scale in Europe. We had projects last year in March. We were supposed to start work in Europe, but COVID closed all of the market. So we found first customers in US, then US closed. So we started the work in US, then US closed, we continued in Europe, then Europe again closed again, we continued in South America. So now we are a global company, able to do the services in all 3 continents. It was a challenging moment, but we did it. And so we are working in 3 continents right now. We have partners, we have customers, we are scaling up in more and more countries in those continents. So basically, we're working in 3 continents.
Well, I mean, with your business model where you're not outsourcing any of it and you do everything yourself, that'd be a resource intensive, right? To be all around,
yes.
To have your own people. So how are you going to address that? You're going to have a customer in Asia, Latam, US, Europe, and you're going to have a demand. So
we need this is why we go for the round A. So basically we need capital to be able to be present in each of those countries. The good thing is that our services are quite profitable. So we are financing ourselves with the services and of course with the investments. So this is why we want to raise quite a huge amount of money in round A and scale faster.
Okay, thank you.
Thank you very much, Dennis. Time is up, unfortunately, and fortunately, I'm glad to present another participant for today. So
thank you.
Thank you. So it's the winner of Unicorn Vessels in Latin America, and the startup is called Wareclouds. It's from Chile. It's about logistics and warehouses, and Arturo is going to share more details about it. Hi, Arturo.
Hi, everybody. How are you?
Yeah, great. And what about you?
I'll share my screen. Can you see the presentation?
Yes.
Right. So, hi, my name is Arturo. I'm from Chile, and I'm a Warecloud CEO. And in simple words, we store e-commerce products and pick and pack their orders in people's houses. This way, we're effectively enabling dark stores wherever they need and at a much lower cost. I guess you all have bought something online and thought that the shipping cost was too expensive, or it was too slow, or it was just inconvenient. And accounting for 53% of shipping costs, the last mile continues to be the critical piece where efficiency and consistency are lacking. And this is because warehouses tend to be far away from the consumers, and also because delivery companies are typically leveraged to strong physical assets and see their efficiency many times above the end consumer experience. So at Warecloud, we transformed a traditional logistics model into a model based on a sharing economy, where we leverage people assets such as their house, or their time, and their car. And this allows us to bring the products of the brands much closer to their consumers, but at very low costs. So how does Warecloud work? We enable to e-commerce warehouses close to their demand by using idle space. We call these spaces the Wareclouds, and our people houses. And we connect those houses with people who have a car and are willing to pick up those orders and deliver them to the final consumer. We call these delivery guys the clouders. In this way, we are enabling any e-commerce to offer same-day delivery, even 2 hours delivery at a very low price. For this to work, of course, we have a platform which allows e-commerce, Wareclouds, and clouders to interact and help us track the order from the moment a sale is created in the e-commerce sales channel until it's delivered to the final consumer. Obviously, it's a very large market which has been on the rise for many years, has been further enhanced with the COVID. And the truth is that we are quite confident in being able to say that the model at least makes sense, because we have had a very high demand for the service. We started 1 year ago and we have grown relatively fast. Today we have more than 100 clients and recurring annual revenues for more than $1 million. And if we add to that we have a good unit economics, we believe it positions us quite well to be able to have a profitable company. Our revenues came from charging e-commerce for storing their products, picking and packing their orders, and for each delivery. And we shared that revenues with the Wareclouds and Clouders. And this is complemented by the fact that both e-commerce, Wareclouds, and Clouders are very happy with how the model works. We have high satisfaction levels, which let us think that we're succeeding on creating a network that adds value to every user. We have defined clear and ambitious goals for the next months, where we are not looking to be a last mile company only, rather a partner that all e-commerce companies want to have. We have the company structured in 3 areas, which are growth, operations, and technology. We are 8 people, all with programming skills, data analysis, e-commerce, and above all, a lot of commitment to the project. So we invite you to join us if you're interested in seeing how we change retail logistics. Thank you.
Thank you very much, Arturo. Any questions?
Arturo, do you have competitors in the world with the same business model?
We haven't seen any company that is, of course, there are companies that they offer fulfillment service and delivery service, but there's not another company that is using people's houses to do this. We are the first one.
Can you tell us about them, these companies, competitors?
Yes, for example, in the US, there's a company called Deliver, which is making fulfillment centers across the US. They are, storing and pick and packing orders, and they are offering 2 days delivery. In Chile, there are companies such as D2C, which are doing micro fulfillment centers, but they have to invest in warehouses, so they are a little bit more expensive than us. And of course, because of the COVID, there has been many last mile delivery companies that are trying to compete with us, offering a different service, but trying to solve a problem that we are trying to solve as well.
Thank you.
Maybe a question. Sorry.
Go ahead.
Thank you. So maybe a quick question from my side. When it comes to the unit economics, how is that going to work out in the different areas of the world where sort of the costs or what people expect to be paid for this kind of service to actually do it for you are going to be much higher? Maybe you can walk us a little bit through that as well.
Yes, it's something that we are up to prove that. Today we are operating only in Chile. This year we are expanding to Colombia and Mexico. And we believe this is something it could be working also in countries as the US. The unit economics in Chile, as we are offering a very good price, and being able to offer a good job for these people in their houses. As we have seen in the US, for example, the fulfillment service with this company, Deliver, for example, is very, very expensive. So we believe that there's a big margin we can play with, and that we could even offer in the US a good job for these people in their houses to be able to pick and pack their orders in their houses.
Interesting. I have a question for you. How about liability issues? Is there a need to partner with a big insurance company in every country? And how does liability look?
Yes, we have been working on it from 1 month ago. So basically what we are doing is we are insuring the products in people's houses. And how this works, we have a fixed insurance amount for each house. So this gave us the challenge to be able to diversify the value of the products we put in each house. We believe it will make sense for the future to be able to partner with a global insurance company to be able to offer this in any country we get to.
I just had a quick question, just building on that a little bit. Even with insurance, how on the trust between your brand and the suppliers of any of the products, how have you approached that with them? You know, if they're transporting their goods and it's being stored in someone's garage, for example, and there may be security issues, even if it's covered by insurance, how do you approach that trust aspect?
Yeah, from the side of the e-commerce that our clients, we are responsible of it. I mean, if something is stored in a house, we will manage each case with the house owner. But from the side of the e-commerce, we are quite responsible for it. I mean, we have seen a lot what Airbnb has done, that even if they could say that they are not responsible if something happened in an apartment, if something happens and Airbnb doesn't take care of it, the brand recognition will fall apart. So from the side to e-commerce, we are responsible for something that could happen in the house. At least until now, that the scale is small. Maybe if the scale goes bigger and goes globally, we should change that. But from until now, the responsibility is from us.
So what kind of goods you mostly distribute with this model?
To be honest, it's very, very, it's kind of everything. We have from fashion, from food, the decoration things, even cell phone accessories. The main thing we have here is that the brand that doesn't have more than 200 SKUs. That's the big limitation we have right now.
Okay. Who's doing the planning? How much where? One thing. Second thing, there is a lot of last mile delivery startups these days. I've seen quite a few of them, and your model is different in the sense that provides people with additional income for basically providing an inventory storage. But most of the brands also have a point of sales, and they actually do fulfill last mile from their store, which is already existing inventory. So I'm not sure how you're going to be able to compete, or you're probably going to be limited into the brands that don't have a lot of point of sales presence in the area to fulfill from there. How are you going to address that?
Yes, exactly. In fact, what we have seen is that at least here in Chile, our customers tend to have one physical store, maybe two in Santiago. So the operation radius for them to fulfill the orders from stores is quite small. So we are allowing them to have this fulfilled place in anywhere they need. I mean, even in other cities in Chile or any place in Santiago. Hello?
Thank you very much.
Yeah.
Thank you very much, Arturo, for a great presentation, and good luck. And I'm excited to announce the next startup for today. It's a startup from Israel, the winner of Unicorn battles in Middle East and Africa. And it's about logistics and warehouse too, and transport. And hi, Jesse. Hello. Ottopia Technologies. Probably he doesn't hear us. Jesse from Ottopia Technologies.
Yes, I'm here. I apologize. I was multitasking, and then my computer decided that it doesn't want to do what I've told it to do.
Yeah, but luckily you heard us, so we're ready.
I'm here.
We're ready.
I'm extraordinarily embarrassed by the fact that my computer is. Why is it doing this? Let's just hide everything. Why is it not returning to Zoom? Nope.
Yeah. Oh,
now you can see
fine.
me.
Yeah,
okay.
We can see you. Perfect.
Okay. I just need to share my screen now, and one more second. I apologize for this. I plan to be much more savvy in my introduction, but of course I've managed to completely undermine that. In any event, my name is Jesse, and I represent Ottopia. I do hope that we won't get interrupted. We have a bit of a security situation going on in Israel, so hopefully we should be able to complete this. In any event, as I said, my name is Jesse. I represent Ottopia, and what we're here to solve, well, before solving, consider the fact that the future of mobility is autonomous. People should not be driving. It's dangerous, it's irresponsible, it costs lots of money, many people die, and it's inefficient. However, every year, there's always this issue of autonomy isn't ready. We need another 5 years. We need another 10 years. And that's because autonomy is extremely difficult. In every industry, there are edge cases. There are situations where the autonomy doesn't know what to do. It gets stuck. It gets confused by situations that we as people see as simple. And so our solution is to enable the deployment of autonomous vehicles with teleoperation. What is teleoperation? The remote monitoring and control of autonomous vehicles by people, involving people in the loop. Every mission critical system has them, and driving shouldn't be any different. And that's our mission. Enable autonomy in every vehicle via teleoperation. This is relevant to every ground vehicle sector. Public roads, shuttles, robotaxis and trucks, private facilities, forklifts, yard trucks, tractors, etc., and off-road construction, landscaping, agriculture, mining. Each of these different vehicle types requires its own autonomy type, but with universal teleoperation, we can service every single one. And this is made possible by two sides of communication. Hardware that we either integrate with or bring partners to supply and integrate with transmits a video feed in near real time to a teleoperator as many as thousands of kilometers away. We have done Tel Aviv to San Francisco, and that teleoperator can then monitor the situation, assist, give indirect controls, which is ultimately safe. They're high-level commands, and if necessary, manually drive, all while done in a cyber-secure and safe manner. We've retrofitted vehicles already. We've driven them on public roads using 4G LTE networks only. We do not depend on 5G. We do not wait for 5G because who knows when 5G will be fully deployed. And even then, today in 2021, in the modern state of Israel, we still see pockets of 3G, so 4G will be prevalent for time to come. Within these screens, I'd like to direct your attention to two main ones. The top left is what the station looks like itself, a number of screens to provide field of vision, and a touch screen at the bottom so that indirect controls, as you can see in the bottom right screen, is path choice. For example, an obstacle is in the way, the driver can assist by telling the vehicle where to go, but without actually taking manual control, thus allowing the autonomy to do what it does best, and the teleoperator continue to give high-level commands as needed. And that's because our system is made up of 5 key parameters. First, dynamic video compression and network optimization. Without those two, you do not have teleoperation, period. Every vendor must have those, but we also have built-in safety systems, what we call ATAS, Advanced Teleoperator Assistance Systems, and built-in cybersecurity, call it a side effect of being Israeli and having ex-intelligence unit officers in our company, and of course to be fully integratable with every hardware and software in the market. Now, we've been tested by BMW, we've been selected for a Horizon 2020 project, we have partnered with EasyMile, we've partnered with Deutsche Telekom, and we've joined the NVIDIA Drive ecosystem as the only teleoperation vendor to be allowed into this ecosystem. And that's because our numbers, our supplies, our technology is the best. This is made possible by a stellar team and an advisory board with brands from all over the world. One I'd like to point out specifically is Stefan, who used to be a competitor. For his own reasons, his company did not succeed, and now he's joined us because he realizes that we are the best option in the market. Thank you.
Thank you. Jessa, any questions?
On which stage are you today?
We have done a number of pilots in mobility, trucking, last mile, logistics, and and mining sectors. Those are pilots and POCs. We are waiting for deployment in a number of sectors. Primary reason for delay is because the autonomy is not ready. But one thing I can say is that I can't say the name, but we are extremely close to signing a 13,000 robo-taxi deal, and that is something that has not been accomplished by anyone in our sector.
Okay, thank you. So you
hi
are still
guys.
pre-revenue, correct?
Sorry?
You are still pre-revenue.
We are pre-revenue. Our projects have been paid for. We do have some recurring revenue, but that will drastically change once the robotaxi deal is actually inked.
Thank you.
Can I jump in? So TRL level since Horizon 2020 grants, where are you there?
Where are we there with the Horizon 2020, or
No,
where are we
the
as a company?
TRL level. Like where have you?
Yes.
Where are you now?
We're ready for commercial deployment. It's just waiting for it to actually happen.
And then question, my hypothesis would be the commercialization strategy or go-to-market would be in gated communities, like in gated systems with an airport or something like that. You're going for the, how do you say, the holy grail, right? The literally autonomous vehicles in open spaces. Is there a reason for that? Because my hypothesis would be to start in other areas. Is it because these markets are most developed in terms of testing and applications?
You're right that there is a logic to going to gated communities, and that's why we've seen some of our competitors pivot from public roads vehicles to logistic and private facilities. It is a lower hanging fruit at the moment. However, it is very fragmented. It is very difficult to scale because there isn't as much centralization in terms of distribution. Each facility is its own. Each operator is their own. There's many different OEMs. It's a much more like I said, fragmented. It's a bigger puzzle to put together. Furthermore, in the end of the day, we're not going to logistics. We're doing all of them. We're also doing mobility. We're also doing ports. We're also doing warehouses, and we're also doing off-roads, mining, and landscaping and agriculture. It's generally speaking, mobility is the most difficult one. So if you can do that, you can do all of them.
Sure.
Just had a quick question on that as well. I noticed you put your total market being 2.4 billion, increasing to 13 billion. Like, what are your assumptions behind that number? Why that? Why not a bigger market?
In the end of the day, we are still a piece of the puzzle. Even if every vehicle is autonomous by 2030, well, it's not going to be that every vehicle in the world is an AV in 2030. As I mentioned, we can speed up the process. We can enable commercial deployment to be sooner, but you're not going to see 1 billion autonomous cars globally by 2030. It does take time. There is a matter of social acceptance. There is a matter of regulation and legislation, which is why we're trying to be a bit more humble in that assumption.
So what are your assumptions behind that 2.4 billion then?
Well, from what we understand in terms of, first of all, what we've seen in reports and what their expectations are for the autonomous vehicle market, and also what we see based on the companies and customers that we're speaking with and what their commercial plans are.
Okay, great.
May I still ask the question? So, sure. What kind of huge insurance you're going to have, because you're going to be liable for something happens if somebody's driving a car remotely. And the second thing is, ultimately, if there's an incident and the AV is not functioning well, then you have to have 1-per-1 driver for a vehicle. There's no way somebody's going to drive 3 vehicles at the same time. So how are you going to scale that? How are you going to guarantee the level of service?
Initially, you're right. The ratio is going to be start at 1-to-1, maybe 5-to-1, 10-to-1. One company we spoke to said that their plan is to have a 10-to-1 ratio, and within 2 years to have a 100-to-1 ratio. The ratio is ultimately up to the level of capability of the autonomy. But you're right. In the beginning, it's going to be 1-to-1 or 2-to-1, and the reason for that is because the autonomy is not ready for that. So the initial added value will not be about saving drivers, but about establishing the system and working together. To revert to your question about insurance, first of all, the level of liability has to be is discussed and agreed upon with the autonomy provider in advance, because we don't override the autonomy completely. The ultimate safety decision-making process is actually decision-making is on the vehicle side, meaning any collision avoidance is ultimately done by the autonomy, not by the teleoperator, because in the end of the day, human error, latency, lag, issues, and that's why avoidance is paramount, and that's why we have ATAS built in.
Right, but when in a situation when you actually take over, as you mentioned, that ultimately if something fails, you can drive it remotely, right? And something happens, then
even then when driving, the autonomy system is still engaged to this in terms of safety, meaning if the LiDAR senses an obstacle, the calculation is made that given the distance, the speed, and the latency built in, the operator does not have enough time to brake to avoid the collision, the vehicle will stop anyway, meaning the operator can keep hitting the gas and the car isn't going anywhere. So there are safety systems put in place to prevent collision under any circumstances.
Okay, I see interesting trials if that happens, but okay.
That's the entire market is quite an interesting trial waiting to happen.
Thank you very much, Jesse.
Thank you.
And our next participant for today is the winner of Unicorn Battles in North America, and the company is called Sherwa. Sherwa is a platform to connect gamers, and here's Luis to tell us more about it. Hi, Luis.
Hello, everyone. Hi, how are you? My name is Luis. I'm the CEO of
Canada, right?
I'm sorry?
Already 2 a.m. in Canada, right?
It's 2 a.m. and 1:54 right now in Vancouver, Canada. And so happy to be here with you guys. I still haven't had any sleep. I'm planning to get some sleep after the session so I can attend the next one. So that is the current state of things right now. So my name is Luis. I'm the CEO of Sherwa. Sherwa is a Vancouver-based company. I'm going to share my screen right now. If you give me 1 second.
Sure. You're our hero, like a night hero.
Okay, now let's.
I see your screen, but it's not a full screen mode so far.
Yeah, I'm just gonna do full screen mode. Yeah. Okay.
Okay.
Can you see that?
It's not full screen, not yet. Well,
Let me stop sharing and I'll do it again.
Yeah, let's try it.
1 second.
We need the best performance.
Just 1 second.
It's just night. It's just because it's night, you know.
Okay, so share screen. Here's the PDF, so it should be working. Let me. And I'm going to do. Can you see it now?
Yes.
Okay. Okay, so sorry about that. Okay, so hello everyone. So I'm Luis from Sherwa. Now I want you to imagine you want to play a doubles tennis match, but on top of not knowing who you're going to face, you don't even know who your partner is going to be. This is what happens today to the 700 million people that play online games around the world. By the way, did you know that the market for gaming is already the largest entertainment market overall? So in our mobile app, the solution that we are presenting, I'm going to do a quick video here that shows the that does show the app, and I will continue. My apologies. In our mobile app, gamers can find playmates with similar interests to play with, as well as more experienced players to help them improve their skills, allowing them not only to connect, but create meaningful and lasting connections online. Our unique solution allows for an instantaneous connection between gamers. No more waiting for replies on forum posts or looking through an endless list of potential gaming partners without knowing who to approach. Our tool has also found great adoption at the streaming community. Using the party feature, small streamers can promote their stream to new audiences and increase the viewership, while large ones can play with their audience in an organized manner. Our beta version has been out from both iOS and Android for over 8 months right now, in which we've acquired over 450,000 downloads and hit almost 100,000 active users in February, with very little marketing investment, actually. We've got now users in over 6 countries in 2 languages, and we're ready to continue to scale and expand globally, helping the lives of gamers everywhere. Monetization comes from in-app purchases, B2B partnerships with endemic and non-endemic brands. We've partnered with companies like Epic Games, PUBG Mobile, and many others. We don't right now have one direct competitor that is already consolidated in the market. There are similar apps out there like Rune or Mute or Plink, but they're either on the same stage of development or still growing the community. We are a team of 3 founders with strong backgrounds in businesses, marketing, and technology. And we have a multicultural team that consists of 20 highly skilled developers, designers, and business analysts. We've also gathered a team of advisors, including high-profile gaming influencers, industry experts, and successful serial entrepreneurs. We will become the largest platform connecting gamers worldwide. Welcome to Sherwa. This is us, short and sweet.
Can you tell how fast your user base growing today, months over months?
Yeah, so we went from 0 when we launched the beta in August to 250,000 by the end of December, and now 450,000 another 5 months later.
Okay. And do you have any revenue today, or are you still very?
Initial revenue, we consider ourselves, let's say, not pre-revenue, because we have had revenue with endemic brands that have paid for pilot events within the app. We also have initial revenue on in-app purchasing, but revenue generation is currently not at scale, and it's only being tested at the moment.
Okay, thank you.
Can you tell me a little bit about the persona of your users? Is there a trend?
Yeah. Absolutely. A 20-year-old employed, believe it or not. We have basically a 60-40 split between male and female, which is, it's hard to measure sometimes because female players tend to identify themselves as male sometimes in platforms because they don't want to suffer any sort of bullying or discrimination. So sometimes it's hard to get that sort of measure, but we've done some research, and they play between the 2 and 3 games at the same time. And we obviously have all the data on the games they play, the time of the day they play, and how many people they like to play with, and all those things. Yeah.
So how do you monetize?
In-app purchasing through in-app economics. So we create an environment where there's incentives for users to pay for a variety of things. So it's a freemium business model at first. Number 2 is B2B partnerships. So basically use the platform for advertising or potentially marketing targeting. And number 3, subscription models that could be potentially inserted in the future as well.
Which is the other language other than English?
Portuguese. Brazil is currently, Portuguese language is currently the 3rd market anyway in gaming. It's China, North America, and Brazil in terms of volume.
Is Korea one of the markets that you want to try on?
Absolutely. In terms of revenue, absolutely. I think they're number 3 or 4. But there's a language barrier that we weren't able to supersede at this point. Yes. Yeah.
Okay.
It would be interesting what you're doing in terms of community management. I did quite similar apps in the past, and I mean, we said every app in the end is somehow tending to be a dating app, and this can be very toxic, especially when you say you have a lot of women on the platform. So what are you doing here to identify those people and cut them out?
I love that question because community focus is what we decided to be. We decided to be a community app and a safe environment for players to come and play. We are fully aware of all the challenges around toxicity and bullying in gaming. You know, League of Legends, all these games are very well known for that kind of behavior. And what we want is to create a platform where people are safe and they can find playmates safely. So we've implemented a bunch of reporting tools and a few other, we have some AI also reading in chats and things like that can flag misbehavior. But most importantly is the incentives that we want to generate for the community not to turn toxic, meaning toxic people will either not find a place here or they will have to adjust. And that is the kind of stuff that we're working on, much more on the community side, maintaining the community than actually on reporting tools, which is most towards the end of the scale anyway, right? When you're reporting it, something already happened. We want to work preemptively and make sure it doesn't happen. And for the dating, you're absolutely right. We've been compared to Tinder in some cases, and although I won't dismiss the comparison because Tinder is successful, we don't want to have that kind of comparison because we are not a dating app, and that's not the kind of behavior that we do encourage on the platform.
Yeah, good point. Thanks.
Can I just ask on the gaming front, do you produce any of the games yourselves, or are they third-party games, or? Yeah, no.
So we don't produce any of the games, 100% third party, 100% game agnostic and platform agnostic. And that's the beauty of it because we basically, there's 5 or 6 different games coming out every day. So there's an infinite amount of possibilities to continue to grow the platform and continue to maintain the platform, even if one of the largest games are not there for some reason.
Have you partnered with any of the Canadian developers? I mean, there's a lot of game developers in Montreal and Toronto.
Yeah. So we have talked with Ubisoft. One of my technical partner actually comes from Kabam, which is a large Vancouver-based mobile gaming company. We have talks with them. We have talks with Epic Games down in the US, and we have connected with all these people. Absolutely, yeah.
So can you integrate it into the games once it's released, or are you still planning to be standalone?
There were 2 ways we could have approached this from the beginning, either the integration API, strictly technological way and spend all money and resources on that, or go the community route, meaning build the community, see what they want, from a more agnostic perspective, and then build the API on top of that. The idea is absolutely to integrate APIs as we grow the community and as we grow as a platform, but most importantly, to have a healthy community and a healthy platform for people to join. But absolutely, the idea is to integrate, and we can, yeah.
Okay.
Thank you very much, Luis. And yes, I'm excited. So now you can have actually a little bit of rest before the second session. I wish you all the best.
Thanks, guys.
Thanks. And then the next startup for today is Notarum, from the winner of Unicorn battles in Asia. And here's Angela, who is going to tell us more about third-party risk management workflow. Hi, Angela.
Thank you so much. You can see my screen?
Here. Not in the full screen. Okay, now it's fine.
Thanks, Marina. Hi, everyone. My name's Angela. I'm the co-founder and CEO of Notarum, and we are your partner in intelligent diligence. So companies every year are spending over $100 billion on compliance programs, but it is really not money well spent. Onboarding times for organizations have exceeded 30 days, meaning when a company onboards a new customer, it takes them 30 days to see any value from that customer. Also, 80% of compliance spend globally is on headcount. This is both bad for business and a huge opportunity for us. And also 90% of organizations trust their vendors. So if I'm a company trying to be onboarded by a large multinational company, I have a vested interest in trying to get around their systems by providing false documents. It's kind of like asking the criminals if they're criminals and expecting them to be honest in their reply. I think we all know the world just doesn't work this way. But by far, the biggest problem with the entire system is fragmentation. Companies use between 8 and 12 different systems, platforms, databases, and tools just to complete a single check. And information is manually transferred between each platform or tool, meaning it's very slow, Staff hate doing it, so they skip some of the process. And it means there's just an opportunity for error. There is a better solution, and we have already built it. Notarum is a global end-to-end workflow solution utilizing AI to automate 90% of the due diligence and third-party risk process. We currently connect with over 200 databases in 150 countries to make sure our customers have access to the richest, most accurate data sources. We also have created an end-to-end workflow solution to utilize this data, and we add value at every stage of the process and to every user in the process. So let me break that down for you. First of all, we help you identify exactly who you're doing business with. Next, we take those individuals and companies and run them through global third-party risk screening tools before we help you complete a customizable risk assessment, conduct all the approvals via our inbuilt e-signing tool, and store all of the details in our onboarding audit trail. We've also built tools for individuals to manage their day-to-day workflow and for managers to get a bird's eye view of how their team is performing and the velocity and how much of the cases they're resolving. Our current customers access our platform either via our suite of APIs to connect with their existing tech stack or via our customizable standalone web-based interface. We can currently service any company in any industry, but we focus on 5 key verticals: fund management, technology, professional services, multinationals, and financial institutions. We've built some corporate partnerships with some of the biggest names in the business. And the team powering Notarum is Jamie and myself. I'm an ex-private equity lawyer who spent 10 years in multinationals running risk and compliance systems. And Jamie, my co-founder, is a UPenn-educated engineer and data scientist who spent 8 years in early-stage startups. Together, we're hitting the ground at the perfect time. Digital transformation is the absolute buzzword of the moment. Compliance costs are a huge focus, and companies know they want to do a better job because their shareholders are holding them accountable. Thank you very much, and we'd love to chat with you more.
Thank you very much, Angela.
Can you talk more about your business model?
Sure, thanks, Peter. So our business model is very simple. We're a SaaS-based business. We do charge across 3 different tiers, effectively. So we do have 3 different levels of capability depending on the modules that you use and also the users on the platform.
And where are you getting your data? Is it all publicly available data, or do you have some, you're signing with some, data aggregators?
Yeah, both of the above. So where we go directly to the primary sources for company registries, we do. UK is a great example. ACRA in Singapore, as you'd be familiar with, they require a third-party access to the platform. So where we've built those relationships, we have. So effectively, we'd like to go directly, but we know it's not an option everywhere. What we have done, though, is built the platform to be totally unlimited by integrations. So we can plug in as many data sources as we like into the platform, which means we can service a wide range of customers. So we currently do company registries in about 150 countries. We do global screening tool. I'm sure WorldCheck is one you're familiar with. And we also have the ability to plug in other data sources like sex offender registers. And if there's any other proprietary sources for those particular regions, we can look at plugging those in as well.
So that would integrate in the bank-owned systems where they, obviously you cannot source individual banks' data, but for the bank that wants to use it. Okay.
Yeah, exactly right. And we're looking at a use case as well with one of the big pharma companies. They have a list of kind of all of their employees, and they'd like to cross-reference that with any of the vendors that they're onboarding to make sure there's no nepotism happening. So that's a use case we can put forward as well.
Angela, on which stage are you today?
So we're currently raising our seed round. We are post-revenue. We do have 5 figures of revenue in market, and we're currently looking forward to raise our seed round. We have raised about 15% of that round, and we're looking to close that out in the next coming quarter.
Thank you. Thank you.
Any more questions?
I just understand a little bit more about your sales model, I guess, and how you target the companies that you're going after and how to partner with them. What's your kind of sales cycle been so far, and what go-to-market and sales strategy have you used so far?
Yeah, sure. So obviously sales cycles being enterprise are quite long, but because we do work across the 5 verticals, we do have the ability to focus on some faster to market. So our initial traction has been in the venture capital space and also in the fintech space. So the good thing about targeting those two industries is that, first of all, it's a 2-for-1 with the VC. So every time we have an investment conversation, it's who else in your portfolio can we help and add value to as well. So that's a really useful conversation to have. With the larger end of town, it is obviously a longer sales cycle, but I think for us, we've looked at some techniques such as partnering with technology integrators as well, going in and partnering with the innovation companies to show that we can add value to a multitude of people within their work system. So it's not just providing value to the person using the platform, but it's providing value to the managers as well. So within large enterprise, there's been really little transparency across this whole process and little ability to manage this process. So that's why we've built the kind of the insights tools for the management team to really understand how their team is functioning. Because that's been, when you use Excel and Word, you just can't do that. So that's why we've built some analytics around that.
And what are the size of the contracts that you're looking to sign? I mean, not necessarily now, but like targeting what average contract value you're looking at?
Yeah, 6 figures. So that's our kind of average. That will be our average is what we're targeting. We're obviously, we're early into market. We've only been in market since last year. So we're still kind of targeting customers, but we do have 5 figures in revenue. So we still have got some initial traction, which we're very proud of. But obviously it's the infantile stages for us, and we obviously have big dreams. So we are looking for partners and some growth capital for that as well. But we've taken the big step, and we've got a product in market, and we have customers. So for us, that's a great step. Now we're looking for a partner to really help us, rise to that next level.
Cool.
Angela, who are your biggest competitors?
So we think about the competitive landscape across 3 different verticals. So the first vertical is client lifecycle tools. So Finegro is a good example. Encompass is a good example. They are big, huge companies with pretty inflexible working models, great at what they do, but they're very suited for specific use cases, and they do tend to target financial services as well. So that's one example. The other example are what we call KYC utility tools. So KYC.com is a good example of this. They focus just on the KYC process, and they kind of go deep and narrow. Before we even wrote a line of code, though, we went to about 150 different customers to validate our idea. And across that, we found out there was a few key, challenge areas. And one was that they don't like dealing with a multitude of different vendors. So we've gone quite broad, and we've provided a workflow solution for the end-to-end workflow. So we basically sit in a different category to a lot of these competitors. The big third category, though, that I really do think about and keeps me up at night is the existing process. So it's Excel, it's Word, it's those kind of manual email processes that we all know is a really terrible process. And when I go and pitch to my potential customers, 19 times out of 20, they're not using any tech at all. They're using kind of, these manual processes. So for us, we see a huge opportunity. And I think the enterprise market is massively untapped because they're just getting started. They're just becoming regulated, much like financial services has been regulated for a long time. And they know that their brand is their biggest asset. And so if you don't protect your brand by keeping these bad players out of your ecosystem, what are you even doing? So that's kind of the third category is the one that I think about as the main competitive landscape.
Thank you.
Angela, thank you so much. And I'm excited to announce the next startup who was the winner of Southeastern Unicorn Battles in Southeastern Asia. And it's Manoj from India. And with a very interesting name like Xoxoday. Did I pronounce it right?
That's
Xoxoday.
right.
Okay.
That's right. Xoxoday. Hopefully I'm audible.
Yeah, we see you, we hear you.
Perfect. Allow me to share my screen once.
We have a
visible?
bit of extra sound on the background, but in general, it's fine. Oh, now it's better.
Is my screen visible now?
The screen is visible. One moment. Okay, it's fine.
Perfect. Thanks so much. Good morning, good afternoon, everyone. I'm Sumit. I am the co-founder for Xoxoday. Briefly, any business is looking at improving the performance, productivity, and growth. And if you look at it at the heart, businesses are still run by people. And when you look at the stakeholders driving a business, it would be the employees, your sales team, your channel partners, or your end customers. Imagine a scenario when these people are not really motivated, which means these are disengaged people, which should really impact your business in a very negative fashion. Contrary, a highly motivated team can really help you deliver bigger results and better results. And that is what Xoxoday does. Xoxoday is a company which is putting technology and motivation at the central catalyst for growth. And the way we do that is we are a rewards and incentive platform which is powering business success. The motivation technology platform is what we do. Today, as we speak, I've been doing the business for the last 3 years. We have been in the business working with more than 800 plus customers, doing a net revenue of $4.5 million. And all that we have done has been done by hardly $700,000 of capital infusion. So we are one of the most highly capital efficient business if you're looking at. We are really targeting a huge market where rewards and incentive spends today is close to $300 billion. And these are across the pockets for different sets of people, which I mentioned to you about. Now, what is the core problem which we are solving in this whole scenario? Most of the times, the rewards are really not linked back to the core business metrics. Second, there's a lot of inefficiency in the systems, manual, expiry, etc. It's not immediate because a lot of calculations engines are getting involved. And last but not the least, there's no global player which can provide a lot of flexibility and choice across multiple geographies. And that is where Xoxoday comes in. We say ourselves to be very similar to the way a Stripe is to payments or a Twilio is to communication. Our revenue model works in the same format, where we charge every reward which is spent through our platform, we charge a piece, and we do charge a software income beyond the reward spends which is happening through our platform. This in a nutshell gives you the way the whole infrastructure works like. So right in the bottom is the reward catalog, which we have built up, which is real-time inventory-less. On top of it is primarily the tech stack, which is built about multiple integrations. Beyond that is the rule engine, the calculations, the DIY, and then we have the application layer, which could be for the employees, channel partners, sales, and customers. So we are primarily a horizontal reward infrastructure platform. And what we have also done is to make it meaningful for people to use, to be available within the ecosystem of tools which organizations use. So you might be using a CRM tool like a HubSpot, a Qualtrics, a SurveyMonkey, or you might be using some marketing automation tool. So, and rewards might be used for driving one of the metrics, which could be customer acquisition, customer retention, employee retention. We are primarily built-in integration so that people can use that from any of the systems which they're already using. And that's one of the key goal strength for us to go in a GTM standpoint. We have been seeing good traction, adding almost a customer a day, riding the entire digital transformation journey amidst COVID. And as we see, we started from Asia and we've been moving gradually towards the US and European market. And that is what we're raising investments for. A sense of the customers we work with, almost 800 customers across multiple geography, 2 million end users working with us. Quite confident about the growth. We have been going well. I think even amidst COVID, we managed to grow almost 30% last year. We are looking at almost doubling this year. And we have a clear-cut plan to achieve our $1.3 billion gross sales in the next 4 years. Margins have been also consistent. We get a gross of around 10% of the revenue of the sales which happens through our platform. And due to the increase in the software income, we have been seeing that gradually increase in the next few years. Quickly, in the last minute, we are really growing well, and what we are looking at to have partners who can help us in the growth because the market is moving that direction. Accelerated digital supply and demand, multiple opportunities, a great integration stack. We are a product-first company and have a large client base which helps us land and expand. We are a team of around 160, almost 100 odd tech people as we speak, and a team of 4 co-founders who are working together to make this success. This is the fundraise requirement, a quick view of the product snapshots. Right, I think that's something which I wanted to speak.
Thank you very much.
Sure.
Any questions, please?
Oh, no, I see that your revenues have slowed down in 2020. Is it right or not?
That's right. That's right.
Can you explain it?
Right. So primarily, I think when COVID hit, the entire market was in a wait and watch mode, right? So almost 4.5 months, we kind of had a market where people were still resisting towards thinking about any kind of spends, be it for the customer acquisition or for the sales incentives. So hence there was an impact because of that. The first half was where we declined, but the second half of the year is where we almost grew close to So overall, we grew almost 30%. The second half was where we grew almost 60%. And that is what we're seeing even in this year to happen.
Thank you.
Any more questions?
Hey, thanks for the presentation. You overwhelmed me a bit with all the possibilities your platform has. So my question would probably be, what is the use case or the customer you like the most at the moment?
So at the moment, we primarily look at landing with the employee side of it, where we say that within the organization, and I think amidst COVID, that's also critical that people are working from different places. How can you look at forming some rewards which can be meaningful to keep them motivated? And that's something which we're really driving it fast. So pre-built integrations with tools like Slack and MS Team, HRMS companies is something which is really getting a lot of attraction.
Can you talk more about your competition?
Yeah, so we have quite a few competition in the global markets. So name a few, the companies like a Tango Card, which is the Bonusly, which is a V-Gift and the Sendoso. These guys have been in the business for the last 3-4 years, and they've been going well, raised quite a lot of money in venture capital. The difference what we have over them competition is obviously we are priced relatively lower, doesn't obviously compromise on the quality. The second bit is the pre-built integration which we have built up is far more higher and far more deep vis-a-vis what our competition has at this point in time. The reward catalog, which is comprising more than 80 countries today, is another key differentiator between us and what our competition offers today.
Okay, thank you so much. And we have another startup who's like startup number 7, and we have still the 8th one coming. So Magnevane from Portugal, who was the winner of my unicorn battles in Western Europe. So hi guys, how are you?
I'm very well, Marina. Good to see you. Good to have everyone here on the call. Tell me.
I actually can mention that Gareth is now pitching from South Africa, although he is from Portugal.
Yeah. So. I am sunny South Africa, but we're going global. So can I start, Marina?
Sure.
Fantastic. Magnevane is a disruptive industrial technology, but why should you care? Because the world, the planet, is in serious trouble. We know we need to transform the way we make energy, but we also need to fundamentally transform the way we use energy in terms of efficiency. Now, what you see in front of you is an air motor. Basically, what happens very quickly is compressed air comes in the top here, pushes these vanes, and turns this rotor, which does work in many industrial processes. In normal air motors, those vanes are forced out against the side using centrifugal force. But what Magnevane has created and patented is the introduction of rare earth magnets, very powerful magnets, in the core and in the vanes, which force the vanes out against the side of the motor and fundamentally change the profile. Now, if you look at overall pneumatics, the motors are very cheap, but the ongoing cost of these motors, especially electricity, is incredibly expensive. And Magnevane can save up to 50% of this. Now, again, why should you care? Because pneumatics uses 10% of all global industrial electricity, a massive amount. And the equation is very simple. Take an existing pneumatic application, replace it with a Magnevane pneumatic technology, and you can reduce energy intensity by up to 50%. To give you context of scale, if we were to go and deploy this across all the global demand, we could remove the equivalent of 350 coal-fired power stations from the world. Now, what's exciting about Magnevane as a company is we make great products, but we're actually an intellectual property and a technology company. We've got 4 patents that are patented in 80 countries and another 10 patents that are entering the process. We make some money from selling equipment, but ultimately we'll make our money through partnerships, royalties, and licensing agreements. Now, what have we done today? Now, as you can see, this motor over here, we can prove that we have the best performing motor in the world against any competitor. And that market is already 8.8 billion euros. The applications of air motor applications is another, adds the TAM to 27 billion euro, which we already have a chainsaw and a pump. Now, where we have working prototypes in positive displacement pumps, compressors, blowers, and hydraulic pumps, we already have working prototypes there. And if we expand to those technologies, we're almost 100 billion euro TAM. Now, very quickly, seed round went in 2018 to get the patents filed. Series A went to acquire precision manufacturing facilities in Portugal 2021, we started making products, so very early, motors, chainsaws, and pumps. Now we're an attractive investment because we're an immediate retrofit. We can immediately put our technology into existing process and unlock value from customers. We have the same cost to manufacture. We can use exactly the same existing services and distribution centers, and we've got this great regulatory tailwind in terms of efficiency. In terms of the investment we are raising, we would use that in R&D to take us from one product to all those products you saw, in terms of scaling our key facilities and distribution centers, and on sales to team uplift and to enter markets such as the USA. Now, we have an independent patent valuation by Clark Moday of 360 million euro. And just to finish, digitization and digital transformation are incredibly important. But unless we can fundamentally change the efficiency of motors in this world, we cannot reach these targets. Magnevane have proven it, they have it, and it's patented. Thank you very much.
Thank you very much, Gareth. Questions, please?
Any questions?
What is the payback time? So if I have to replace my motor with yours, there's a cost associated. And I would assume your motor is probably more expensive than the normally used today.
Well, in some cases, we're actually selling cheaper than the incumbents because we only add on a 5% cost base to the actual product. So, you know, from a margin perspective, we can actually come in under the existing competitors. Now, to answer your question, it depends on the application. Sometimes air motors run for 1 hour a day. Sometimes they run for 16 hours a day. If they run for 16 hours a day, you'll pay it back in 6 months. If it runs for 1 hour a day, it'll take longer. So it all depends on the types of applications, but we've been oversimplistic in the value proposition. We're not just about efficiency. We also have far higher power. I mean, I don't want to get into the technology here, but this is a comparison of ourselves versus the best in class, the LZL15. Now, these two motors are using the same amount of air. This is our power profile. This is the competitor's power profile. This is our torque profile. So, and it also we're 3 times longer on the maintenance life cycle. So there are a few different things that come into it, but it actually depends on the application, how quickly it pays back.
Hey Gareth, can you just tell us a bit more about the team and you know the all of you that started the business and just understand the expertise behind it?
Absolutely, no problem. So Karim Krenji was the first investor. He's a Canadian Indian national. He invested the seed round to Stephen Nicholson, who's actually the inventor of the IP. He created it. He was working in the smelters at Moselle, and he invented the IP, got Karim on board. And then when we needed to scale, because essentially we got orders from the large orders from the mining sector, but they wanted us to have our own manufacturing facility. Then Jivarem Tula came in and as our global CEO and investor, where he put in round A, where we acquired our production facility. Now, all the individuals you see down here are from the production facility that we acquired, whereas this is, let's say, the Magnevane executive. Luis Santos is our head of global products. He was the ex-VP at Metso, incredibly capable guy. Ian Stern is our COO, and he's also a banker and a very, very capable individual in terms of investments across the continent. Antonio Brandao is the CEO of the Portuguese operation, and I am the head of Southern Africa and global business development. And then obviously we have a team behind us.
What's your revenue?
So as I said, we only started selling at the beginning of this year. It's currently, you know, a couple of 100,000 euro. We should end the year at about 2 million euro, but then it's quite a strong scale from there. Very quickly to explain that, we have working deals at the moment in 3 large industrials, AngloGold Ashanti, Sappi, and Harmony. And how these things normally work is you do a pilot proof of concept for about 3 months. That happened last year, and now we at our first order. So as soon as first order then is proved after a month, you start getting these really nice exponential upticks because they're very large existing bases of this equipment. And then once you've got one mine taking it, it's very easy for the other mines to take it. Once you've got one paper company, then it starts rolling. So where we really need to go now, to be honest, is we need to move into oil and gas, where some of the biggest demand is. At the moment, we're mainly in mining and paper and pulp, really as a result of how we've grown up.
I read the review earlier. I think you're stating that you're open to licensing at third parties. Do you have any licensing agreements in place yet?
Well, we actually wanted to only be a licensor and a royalty provider. We see ourselves as a technology company. And what we found is we're quite disruptive to the incumbents. We go and we deploy, and it halves the value for their distribution on ongoing services. So we found there's a little bit of resistance in the beginning, and then the OEMs that wanted to come in wanted too much of the company for too little because we didn't have commercial scale. So we actually plan on fully scaling in the long run, let's say 80–90% of our revenues through licenses and royalty agreements. But we realized that actually to get the most value, we should start making our own products as a brand and start entering the market, start disrupting some of the incumbents, and then be really open to scale through licensing and royalty agreements and co-development in many cases.
Okay, maybe one more question. I would be interested on why this hasn't been done before. Now that you mention it, it makes a lot of sense to put magnets into pumps and motors everywhere.
Yeah.
And the second follow-up is probably, do resource costs and magnets influence your business? I mean, I'm looking at shortages and price fluctuations.
It's a great question. Really good question. So I mean, it's almost amazing, unfathomable that someone hasn't put magnets in this context, because it's super simple, the problem that it's solving. And what we found is people had tried different things, but what we really patented was the opposing magnets between the core of the rotor and the vane. And no one had even tried to do that across the world. As I said, we have patents in 80 countries, which includes all the big ones, US, China, etc. So we have 100% novelty of the use of magnets in that application. So luckily we're patented in there, and prior art wasn't established, which, as you say, is almost amazing. It's one of those last nuggets of ingenious, which seems so simple. And then to your second question, sorry, your second part of the question, just to remind me?
Oh yeah, resource costs of magnets and shortages.
Yes, okay, very good question actually. So magnet costs, and we use neodymium magnets. Obviously, we could use other magnets as they come out, but have gone up over 100% in the last 12 months. So it's certainly one of the things that's on our risk agenda. There are rare earth magnets, 90% come out of China, and that is something that we're very, very conscious of. Let's say we have contingencies in place for that. The magnets only constitute about 3 to 4% of the cost of a motor, and obviously, you know, the cost is only 20 to 30% of the end sale price. So from a cost perspective, even if it doubles again, it's not going to kill the business model, but it is something that we're very, very aware of. You know, the likes of Tesla go upstream and own lithium mines in Congo. We're not quite there, but you know, it's an interesting question.
Okay, thank you very much. Thank you very much, guys. And the time is up. So we have the last startup for today, whose name is like 8base. And this is the startup from USA, Florida, particularly. And we have Albert here. Hi, Albert. Good morning.
Good morning. Can you hear me and see my screen okay?
I can hear you. I can see your screen. I'm wondering if I can see you. A moment. Oh, seems like fine. Thanks.
Well, hello, everyone. I'm Albert Santolo, founder and CEO of 8base, a low-code development platform for building digital products. I got my start as a software engineer, later a management consultant, helping large US companies with digital transformation, and then became an entrepreneur, having founded and exited 2 venture-backed enterprise software companies prior to 8base. 8base was born from my direct experience as an engineer and an entrepreneur. I simply believed that we could build a platform that accelerates the development of production-grade software to the benefit of founders, especially non-technical founders. In essence, we're democratizing creation. We compete in the low-code development platform space, which is growing from about $10 billion today to an estimated $52 billion by 2024. You know, founding companies has gotten a lot easier, but building digital products is still hard. Most founders focus on the part of this iceberg that they can see, which is their front end. What's below the waterline is what often trips them up, causing product rewrites and company failures in some cases. So 8base gives, you know, 65% of founders today are non-technical, and this number continues to grow. 8base does an amazing job of giving web and mobile developers superpowers. Our product today allows creators to build powerful, scalable web and mobile apps with a compact team of only front-end or mobile developers, as small as a team of 1. So you would ask, what type of products? So people have built multi-tenant SaaS, marketplaces, portals, and essentially think of them as customer facing. This doesn't mean we can't build internal applications, but what you'll find in the market is that there are other low-code players, but most of them are focused on the internal applications. There's very little that can, help with external products. And this is witnessed by, if you talk to any given startup, they're typically building from the ground up. 8base is built on top of Amazon Web Services. Our platform is extensible. It's a headless backend that includes a managed relational database, serverless infrastructure, role-based access controls, integrations, and more. And all of this backend is made available through a single GraphQL API. It's driven by our GraphQL engine, which is the most powerful in the world. And this GraphQL engine is a big part of our innovation. We've been working really hard on what we call App Builder. App Builder will be released later this year, and App Builder is a full drag and drop user interface development capability. So if you think of modern software as a back end, a front end, and an API, 8base today does the back end and the API really, really well. The front end tooling is something that we typically do with our professional services group, or our customers do it themselves. But App Builder fulfills the vision of full low-code development, and will allow developers to build front end all the way through back end in a fully scalable way on our environment. So, our services group supports our platform. We have lots and lots of customers around the world that just use our platform, including IBM Global Services, which has built an AI-powered human capital management marketplace for NATO and Europe. But we also have customers that engage with us where we help them design and build on top of our own platform. This provides an excellent dog fooding opportunity inside of 8base to help make our product better. And also the revenue from it helps to bootstrap the company and create less of a reliance on investment capital. So in terms of traction, we've raised about $4.5 million. We have about 4.6 million in sales. To date, we're getting close to 5 million now. And we have about 5,000 developers around the world that have used 8base in some capacity. And we're expecting, over 100% growth this year. And we've had 100% growth every year since. So thank you all very much.
Thank you very much. Any questions, please?
I just had a quick question on the, was it called GraphQI, or the kind of innovative side of your technology? Are you able to just explain that in a little bit more detail as to how that helps differentiate against any competitors in the market?
Yes. So most low-code competitors are monolithic, meaning that you're developing a front end and a back end at the same time, and it's all contained in a monolithic application at the end. The best practice in today's world is to separate the back end and the front end. So separation of back end and front end emerged when mobile came out, because you needed to serve multiple form factors. And so most of that happened through RESTful APIs, which means if you think about back end data, RESTful API endpoints typically mimic the back end data. So you might have hundreds in any given application of different endpoints. What GraphQL does and what 8base does is 8base reverse engineers the definition of your backend into a single API endpoint that is fully queryable. It comes with very advanced commands so that a front-end developer, all they have to worry about is talking to that single API, and they can dynamically query the data behind the scenes and do very, very sophisticated things. Does that make sense?
Yeah, perfect sense. Thank you. And of the 4.5 that you've raised to date, how much of that has been used to build the platform, and how much of that has been spent on generating the sales you've generated today?
That's a very good question. I would venture to say that probably 60-70% was about platform development. We're in the early days of creating the sales cadence. We brought on a chief revenue officer in December Up until that time, sales and marketing was primarily me and my team back, supporting me. But we now have 3 quota-carrying salespeople, a head of sales, and we've staffed up marketing a little more as well.
Thanks.
Any more questions before we start the networking part?
Albert.
Yes. Hi, Alexander.
The month-over-month growth rate of your platform revenue for the last 3 months or this year?
It's been on a monthly basis, the platform revenue growth has been in excess of 10%. It's fluctuated quite a bit. If I was to pick an average, it'd probably be, somewhere in the 12 to 15% level.
Okay, thank you.
Thank you.
Okay, thank you very much. Our pitching part seems like it's over already. And let's see you all at the second session, which starts 7 p.m. San Francisco time today. And in the meantime, I'd like to pass the word to Anna, who is going to take care about our networking part. Hi, Anna.
Thank you, Marina. Thank you, startups. You did great. Don't remember, at 9 a.m. San Francisco time, we're waiting everybody up and bright, because as the sun goes over our planet, more judges will be pitching in, and you will be presenting yourself again for North American judges, for those European judges who prefer nighttime and not daytime, and for Asian judges who prefer early morning. And for judges, please finish your voting. You can change your vote until we close it. And we close it at the end of today. It will be around, I would say, noon San Francisco time, PST. So you still have time to vote, but many more judges will be plugging in and voting. So we will announce the winner in I say 9 hours, maybe. But be sure to stay with us. You can reload by this time our event page, and you will see, because all our scores are official. And let's talk to judges. How is it different for you, Unicorn Cup from Unicorn Battle? Do you enjoy this more? Because I was listening to our startup pitches and texting with Alexander, and we said that startups look really great. Like, if when competitors are strong, sometimes startups, they even seem stronger, right, Alexander?
Yes, I really enjoyed today's final.
Yeah, they are great guys, great.
But the one of the reason is probably because all the startups are the winners today. They have already win in continental battle.
Absolutely, yes. So like, you judges doing a great job picking the right guys, right? That is really wonderful. I would like to ask our judges. I was reading last articles from the Crunchbase, and I just realized that this quarter, first quarter, like not only the first quarter, by April and May, where like was a blast for venture industry. The fundraising hit all times high. We, for the first time over a single quarter, first quarter of 2021, the venture capital invested more than 100 million in startups. For the 125 million.
Not million, billion, Anna.
125 billions of dollars, of course. Yes, thank you for helping me. 125 billions of dollars over a single quarter. And if we look at the unicorns count, for every single working day, we have 2 unicorns born, starting year of 2021. Is it something or what? I think we are witnessing a new era of startup development, venture capital development. And I think the venture funds are becoming more easy in giving away money, probably. Tanya, what can you tell me? What is it easier for startups to fundraise? Is it easier for you venture capitalists to invest right now?
I've got the Berlin hat on, and I can only tell you that it's totally true. I even bumped into one of the most active VCs walking around Berlin yesterday. Yeah, I think COVID hasn't had an impact on negative investment cycles. It's done just the opposite. The markets are bullish, and we see massive valuations even out of companies that just popped up less than a year ago. So I'm super excited about that. And from a EIC perspective, and when I look at sort of what we've done, you know, funding a lot of the technology companies that are so-called non-bankable from the European Commission side, I think it's done a tremendous job in making some of these deep tech companies TRL ready and fundable, and filling a gap in the market to create more unicorns. So I'm super thrilled, and I thank you guys for doing a great job and picking some of these great companies that we met today. It's been a joy.
Thank you. I hope we will see them in the list of the unicorns pretty soon. I hope for that. Seamus, tell us please, what do you think is the, I don't know, the biggest mistake of the VC, to miss out on a hard deal or to overpay for the same deal? What do you think?
Good question. I think it's become increasingly difficult these days with the proliferation of capital and you know, some of the bigger funds in particular starting to preempt rounds, and especially in particular for smaller funds who put in you know, smaller amounts can sometimes get crowded out. So it's certainly an interesting dynamic. I'd say from our perspective, we always would rather invest in something that we truly love and we believe in spite of price. I think that's something we always look at things from a long-term perspective. Obviously, we have you know, LPs to answer to and make sure that we're trying to generate the returns we need to for them. But I think if we think the opportunity is big enough, then price can definitely be something that can be thought about differently. I think from our perspective, in Southeast Asia in particular, I think it's just a really exciting sector or geography of the world to be looking at. You know, there's such huge opportunities and you know, that's being reflected bit by bit in terms of pricing. You know, even just I was looking at some stats the other day that there's just, you know, the GMV potential in Southeast Asia is huge in terms of e-commerce. But I think the online penetration of retail sales is only at 2 or 3% relative to, you know, closer to 40% in China and 15-20% in the US. So I think when it comes to price, we don't necessarily, that's not necessarily the first consideration. It's obviously a big consideration, but we certainly look at the opportunity from a wider lens to start with, and if we can get comfortable with that, then yeah, it's less of a consideration, I guess.
Wonderful. Thank you for answering. Then we will bring more opportunities to the table next season. Be sure to check them out. And Andreas, can you please tell me, will these trends that we see right now with this bullish venture market, will they stay with us throughout the year? Will we be able to keep the pace? Will you be able to give out money like crazy for the whole year?
Yeah, that's a good question, but I think yes. I mean, funds are usually like built for 10 years. Those funds have money; they have raised a lot of it, and they have to spend it. So I don't think this is like changing quickly, but this will be a longer trend. But also regarding the market, I was thinking a lot. Is it easier for startups to get money? I don't know. Yeah, it's probably not harder than before with a lot of money in the market, but a lot of it is going to these big unicorns, as you mentioned. Yeah, it doesn't mean that for seed startups and Series A startups, it's getting a lot easier, because those big amounts we see in the market, they are usually going in 100 million tickets to those big startups that then are making the statistics in a big case. But I think in seed and in Series A, and we see it in the competition, good startups are getting financed. And then it's just for us to see the opportunity and pick the right ones.
Yeah, but what makes a startup a really good one? Can you please tell me what is the biggest mistake you had seen the founder make? Like, for example, you love the startup and then founder does something and you say, oh no.
I mean, there's a lot of mistakes a founder can do, but I think in the first step, I mean, pitching to myself and other colleagues, I think biggest mistake he can do is just not being authentic. I think he has to know who he is and just be open and transparent about it, and not overselling or just having learned all the pitch, but really being authentic, being himself, just selling what he has in motivation and in fun doing this and what he wants to achieve, what his vision is. This is the most important for me to get a feeling for the company. I often see teams pitching that have like trained their own pitch, that are not authentic, not saying what they think, but having learned something a consultant is telling them. And I mean, I see a lot of pitches all day. I can tell the difference. Yeah.
Okay, thank you. I hope you all enjoy our first part of the Unicorn Cup. I remind you that we have many, many more exciting moments to go when the sun comes up over the Americas, because a lot of judges want to pitch in. We can stay and discuss a little bit, or we can go on a break. What do you say? Everybody's nodding me.
Break is a good idea.
Really? Okay. Let's go drink some coffee for a couple of hours and we will be back exactly in 5 hours. Oh, no, 6 hours. Sorry, guys. I see you all online. Startups, get ready, get good sleep, and get ready for the next speech session. Thank you for being with us. Judges, yes?
Anna, and what we are going to talk on our discussion in America?
Oh, yes, we're going to have a special guest, a Mancher, who is the startup that we invested in, right, Alexander? Who was the winner of the our unicorn battle in Latin America, and he raised 26 million.
22, yeah.
Look at the Crunchbase, it was 25.8. Yeah.
I thought 25 in Forbes, so we can argue now.
Yes, and we will we will have a panel discussion with him, and then a discussion with him and our judges about that, about how to fundraise from Silicon Valley investors, how to for a startup, build a Colombian startup to fundraise from guys from Spain, from Florida, from Silicon Valley, and that is it. He'll give us some insights how to do it.
Great.
And by the way, one piece of advertising at the moment. So Juan is was not only founder, but he's a serial entrepreneur. As an investor, he has 3 investments, and out of 3, he has 1 unicorn. So I never saw a better statistics of investments. So let's keep in touch and wait for the evening discussion.
Yeah, we'll ask him how did he do it.
I'm following him as an investor.
Great. Okay, guys, see you all. Yes, and we are going on a break. Can I have video, please?
Thanks all.
Thank you.